The views discussed in this conversation are the views of individuals and not of Arrington Capital. This podcast is provided solely for informational purposes and is not financial, legal, tax, or investment advice. The participants of this podcast are not recommending any particular security, protocol, token, financial instrument, or other tradable asset or any investment strategy. It is not offering to sell or soliciting to buy any security or asset.
Hi everyone, welcome back to the Pirate Pod from Arrington Capital. Today we have Bhaji from Centrifuge with us. Really excited on diving in. We were just discussing that the time that we're at, RWAs and stuff like digital asset treasuries are having a moment. And so I think the timely conversation here will be interesting given sort of the swing in that direction versus more of the degen stuff that we've seen pop up over the past years. So before we get started, we always like to introduce our founders and our leaders and let them share their journeys into crypto. So Bhaji, would you give us a little bit of your background and how you ended up at the helm of Centrifuge?
Absolutely. Hi, Kelly. So great to be here. Thank you for having me. So I am Bhaji. I'm the CEO of Centrifuge. I joined Centrifuge about 2.5 years ago. So as Kelly was mentioning, now is the time for RWAs. I can't say that I've been grinding alongside the team since 2017, which is when we were founded, but I've been watching and cheering them on from the sidelines. So I met the team who founded Centrifuge back like 15 years ago. We worked together for 5.5 years and we'd stayed very closely in touch since then. My background is very early stage, usually first person in the go-to-market team, coming in with very technical founders to help bring the company to market. So how do we really map out who our customers are, what the category is, how the product that we've built applies to the audience that we're selling into, and how do we build and grow and scale from 0 to 1 to 1 and far beyond. So I've been across a few different industries, always creating new categories, bringing technology into antiquated industries, from supply chain finance and fintech to marketing to product management. So when the Centrifuge team tapped me a couple years ago, asked for me to come in and join Centrifuge, the focus then was really, how do we take this work that we've been building for the past 5 years and how do we scale it to broader audiences? So at that point, it was very niche crypto markets, a very small use case and a lot of testing and iterating and some proof of concepts for real world assets. And a lot of what we've been focused on is how do we create a community and ecosystem beyond just the early DeFi builders? How do we get adoption, recognition, awareness from an institutional audience? How do we really scale these products out to the masses and far beyond? So about 6 months after I joined as chief marketing officer, took over the sales function as well, and then worked really closely with Lucas to create a path where I moved into the CEO function to really focus on adoption and growth and bringing Centrifuge to the next level.
You worked with the rest of the team 15 years ago. What were you all working on back then?
It was called Talia. So supply chain finance, where we were working really closely with Fortune 500s and connecting them with their suppliers and then doing early payments on invoicing. So I was employee 10, first person in the go-to-market function, working really closely with the founding team, and then stayed through 350 employees, Series E financing. Ultimately, Talia got acquired by SAP, so really cool growth story. And a lot of the original idea for Centrifuge back in 2017 was, how do we take what we built at Talia and do it on Web3 rails and really reap a lot of the benefits of blockchain as the underlying technology powering it.
Amazing. I love to see someone so focused on growth or step into that leadership role. Some of the more favorite investments that we make at the fund are, really technical founders or really deeply finance founders that bring in really strong people like yourselves that can help grow and expand the business. Can we talk a little bit about the space right now? Obviously, Centrifuge is one of the large players leading the transformation of RWAs at the forefront and how finance is going to move in the future. What's your take on the point that we're at, knowing that you've seen some of this before? What's the point that we're at with crypto and RWAs and where they're going?
Yeah, so it's a really good year for real world assets. So we have regulatory tailwinds in the US is emboldening a lot of the institutions who've been interested in tokenization to finally make a step. major players like BlackRock putting their weight behind tokenization and really investing resources and brand and team to grow and scale tokenized funds. And then paired with the evolution and the sophistication of the technology. So we have strong regulatory tailwinds, we have institutional readiness, and then we have really strong infrastructure that's been built over the last 8 years. So where we're at now is that there's finally this convergence of readiness from the major asset managers and institutions who want to tokenize their funds and want to bring them on chain and manage and grow and scale them. And then pairing that with liquidity from the buy side. So it throughout the course of time in RWAs, hasn't really been the right match between supply and demand. So early days, there was a lot of supply. There's all these assets that could potentially be tokenized. You saw things like, very esoteric assets. There was a lot of supply chain finance back in the day, a lot of real estate. But the challenge that RWAs had was that there really wasn't that demand driver. So there wasn't a huge, interest from on-chain capital to allocate to these more stable and boring yields. So the rise and strong growth for stablecoins has really been the final piece in the puzzle that has propelled the success that we've seen for RWAs. And that's twofold. One is a collateral use case for stablecoins. So folks like DAI and a lot of the yield-bearing stablecoins, they work with tokenization platforms like Centrifuge to manage the reserve. So we buy and sell the T-bills, we manage the money market fund, we pass that yield through to the stablecoin who can then choose to pass it to their users or partners or whomever in the ecosystem they want to share that with.
Is Centrifuge creating the entire mix for those strategies?
Yeah, so right now we have T-bills primarily. We just launched a fixed income fund, a AAA rated CLO fund alongside Janus Henderson. So they manage a 25 billion CLO fund, a 40 Act fund in the US called JAAA, and they're creating that same strategy on chain. So that's very similar liquidity, actually stronger rating right now than Treasury bills. And about 6% yield, so slightly better yield. So now what we're looking at is a mix of T-bills, a mix of JAAA. We have a couple other private credit deals in the pipeline that will be coming very soon. We just announced tokenized S&P 500. So right now, most of that collateral backing is T-bills. But a lot of the conversations we're having is around what comes next. And then as they start to diversify outside of T-bills, that can stay with Centrifuge. So right now, all the RWA side, we will and can manage. The crypto side, so if they want to have exposure to more like higher yielding basis trades or further up the curve, is still managed independently.
What do you think the biggest hurdles are that any of the traditional finance players that you're running into, given all of that you said, the infrastructure, the point that we're at, the regulatory environment, what do you think the biggest hurdles are for that group today in coming in and doing more here?
Yeah, I think the biggest hurdle in general is still the demand side. So we have way more of a pipeline on the sell side than the buy side because any asset manager you talk to would love to tokenize their fund and access this new capital source. So the question is how can they actually grow TVL and grow AUM for that? So for the JAAA fund, for instance, that was actually led from Grove, which was just announced 2 weeks ago. It's the latest star in the Sky ecosystem that was created to do all of the allocation for RWAs for Sky. And they led with $1 billion investment into JAAA. So a lot of the pace of the industry is really driven by how those tokenized products can grow on chain. Beyond that, like I said before, like regulation has been a blocker in the past, not necessarily because they're weren't like clear regulations around securities, which there are, but more so just the uncertainty around the regulatory landscape and the enforcement actions, and if there's brand and reputational risk that's still associated with blockchain and crypto overall. So I think a byproduct of that regulatory side is a lot of the education, and that comes from folks like Centrifuge, who host the RWA Summit and created a tokenized asset coalition, and we bring all these communities together to drive education. But it also comes from Larry Fink and Jamie Dimon, and a lot of core education around things like the difference between crypto and blockchain, and how these technologies should be thought about in different ways based on different use cases.
I love that we're all still doing this massive education outreach.
I know. I mean, you know it too. You've, like you mentioned, more folks bringing in growth and go-to-market people, and I feel like that's a rare area that I'm engaging with, but something I've really liked of the work you're doing and the value that you bring into Arrington and the portfolio companies that you all have.
It's funny. The education, I think, is still so interesting that we're still having, through some lenses, the same conversations that were being had 5-6 years ago. I remember being on a call with the head of comms at Circle, and I was at Algorand at the time. We were both in Boston, and we were talking to the Boston Globe, and we're trying to explain blockchain. And I think we'd still have the same conversation today, literally, same exact one.
Yeah, well, somebody explained it the other day. They're like, I mean, there's just so many layers in the organization. So like, whereas before it was like the one young, hungry, passionate, excited person who got it, who wanted to pioneer. Now it's like them and their boss, which is awesome. But it's still like their boss's boss and the board that really needs to catch on to it. So we are making progress, but it's still like, and for most part, bottoms up education.
You brought up regulation a little bit. Can we double click on that for a minute? How are you navigating that with Centrifuge and everything you have to do there, whether it's education on your behalf for your customers and who you're bringing into the ecosystem, and as well as understanding it yourself and sort of this ever-changing landscape, especially because you're managing this across different jurisdictions. What's your take there? What's your approach? How are you managing that?
Yeah, so we are licensed and regulated through our asset management arm in BVI. So we're following the full regulatory landscape as it relates to BVI fund structures. As it impacts us directly, it's more so the folks that we're working with on the asset management side, and then the partners that we're working with that really can bridge TradFi and DeFi. So are there exchanges who can support traditional assets and tokenized assets? Are there custodians who can support both of them? So as it relates to Centrifuge's ability to deliver on our immediate term vision and create a fund structure that can act as an on-ramp for these asset managers to tokenize their funds and to come to market quickly, the regulatory landscape doesn't have a direct impact on that. As it relates to the ecosystem of partners that can support on the infrastructure and on the growth side, and then the readiness that we're seeing in terms of banks and fintechs and asset managers wanting to move quickly to get on board, that's where we're seeing a really strong pivot in terms of how the regulatory landscape is impacting them. I think generally, of course, the stablecoin bill and the market structure bill and the progress that we're making are all growth for the crypto industry will help Centrifuge, because the more folks we have focused on building, the more money we have on chain, the stronger demand we'll see from all these tokenized products. So I think Atkins the other day was just talking about how he reinforcing the message that we really want the U.S. to be the innovation capital of the world and create a firm foundation where companies can innovate and bring new products to market. So that broadly is just what we love to see in the direction that we're really excited to be a part of. I mean, I'm based in the U.S. We have more people that we're starting to hire in New York and build out our presence on the East Coast, and really just staying closely attuned to what is happening and how a Centrifuge can continue to participate in be where we're seeing both the buy and the sell side demand and interest growing.
How quickly do you think the US taking action will catalyze some of that on a global level? Do you think you'll see a significant, quick increase into the size of your ecosystem, or you think it'll be drawn out more as it has to trickle down to other jurisdictions?
It's a good question. I mean, I think that we'll see more asset managers coming on chain faster, but we might not necessarily see more investments and capital coming on chain faster. So what will really drive the industry is when we start seeing traditional allocators who see net new benefit of investing in tokenized assets over the traditional form that they have access to, or net new retail users based in emerging markets getting access to equities and stocks that they didn't previously have access to. So I think we're getting very close to tokenization and RWAs as a catalyst for new capital to come on chain. And we're not quite there yet. So we're still, I mean, the big question we have at RWA Summit, at EthCC is like, how do we grow the pie? So how do we stop just taking from these places and different pockets of existing on-chain capital, and how do we bring more capital on-chain?
Do you think the original vision that Centrifuge had back in 2017 has changed as that, what you were just talking about, bringing more people into the pie, has changed, or we need to focus on that? How's that mapped up with the original vision that Centrifuge had?
Yeah, so our original vision came from our supply chain finance background, so really focused on, and just to double click on that, it's like, Coca-Cola, Walmart, these Fortune 500 companies, they have invoices that have payment terms of 60, 90, 120, like insane length. So the supplier, they buy the products, they produce the products, they ship the products, and they have to wait 4 months to get paid from this massive company who has magnitudes more than this small business will ever have. So our team was like, that's messed up. We got to give the small people access to cash in the same way that the large businesses do. So a lot of that vision is the blockchain vision, and it is still the Centrifuge vision. And we really want to democratize access to reasonable capital sources at reasonable prices for the long tails, businesses of all sizes. We started with some deals that were more on the supply chain finance side. We evolved to do some more like long tail esoteric assets. We then did some more on-chain structured credit. And over the course of time, what we really realized is that point I made earlier around the mismatch between the supply and demand for tokenized assets. So then we took a step back. We said, where is there growth and where are there drivers that can actually see increased AUM? And that was like late 2023 when interest rates started going up and DeFi rates started going down, and then we saw this major inflection for T-bills. So at that time, we said, okay, we need to kind of go where the market is right now. The infrastructure and the technology that we've built supports every different asset class because we built it in that way and we've evolved it over time. Right now, the need is for T-bills. So not sexy, but like TVL growth and $8 billion in AUM is sexy. So go where the demand is, got really strong partners with Janice Henderson, won the tokenization Grand Prix, really grew that fund. And now we're moving into JAAA. We're doing the S&P 500. So we're staying more on the fixed income and equities side, just based on where we're seeing the interest right now. And then starting to build utility and liquidity and composability and what we call this like DeFi connectivity layer on top of that. So we have the assets that come in. They're then plugged in across DeFi, so plugged into lending markets, plugged into stablecoins, plugged into yield aggregators, used as a collateral asset in any of these protocols that want to be built with an underlying stable yield layer. So we believe that infrastructure we're creating, where we have the tokenization pipeline, we have the structure that supports any different asset class, any different issuer at any time that can get to market really quickly, and then paired with this immediate connectivity into DeFi ecosystems.
Can you talk a little bit about how that's working under the hood? Like more about the tech, and you've been working on this infrastructure for a really long time, but tell us a little bit about the interoperability and some of the DeFi plugins and how that's happening.
Yeah, so on the asset management side, everything, what we've found is that a lot of the asset managers, they're not ready to go directly to the tech. They want a more managed service approach. So one of the big unlocks is that we built a regulated asset manager called Anemoy that is able to act as this on-ramp where an asset manager can come in as a sub-advisor, a sub-investment manager, and they don't have to do the entire setup and the structure and the legal rigor around it, so they can come to market really quickly. So that was one big unlock. And then on the flip side, the DeFi integrations are kind of two parts. One is based on relationships that we've cultivated over the years. So we've been working with Maker and the Sky ecosystem since for probably 5 years now. We actually minted the first RWA or the first DAI backed by an RWA with them back in 2020. We've been working with Aave since we did the first lending market with them in 2021. So a lot of that, the connectivity layer stems from many, many years of us building those relationships within the DeFi ecosystem so that when they think about a trusted partner that they can integrate with, that they can build these products together with, they think of Centrifuge. So that's been the kind of growth and BD side of what these integrations look like. And then on the tech side, we just did a migration from Polkadot to EVM for our core protocol. So that is natively multi-chain using chain abstraction that allows any asset managers to manage liquidity from any chain on one chain. So that's been a big unlock as well, because when you see multi-chain from a lot of these other tokenization platforms, it works, but it's a complete different setup on each chain. So you have to manage the fund on Arbitrum and Base and Plume and every different chain individually. With Centrifuge, from the asset management side, you just manage that in one place and you can collect liquidity and you can collect any different type of stable coin from any different chain, manage it all in one place. So that's a big unlock. The modularity that we've developed over the years, where we're built to support any RWA regulated fund share all the way to DeFi curated vault strategies, so full flexibility, allows for a lot of these integrations. And then finally, there's a lot of standards that we've built in. So of course, ERC20, and then ERC 4626 is at this point now managing over 13 billion in TVL. And then one of our chief technology officer, Jerome, actually co-authored the 7540 standard. So then the combination of ER6 4626 and 7540 allow for synchronous and asynchronous vault management. So then that enables on-chain settlement for any asset, which is first ever. And then any protocol can plug in based on those standards. So I think to your point earlier around what was missing, another piece that was missing was standards, because still everyone is kind of building in their own way, and that makes a lot of this composability pretty difficult. So as we think about the EVM protocol, building V3, we from day one wanted to build it in a way that allows for ultimate flexibility, composability, integration, and does so in a way that can grow and scale and evolve as the industry does as well.
That's an amazing overview of how that's all working under the hood. So thanks for taking us down that path and indulging me. You were at Con. What's your take on the audience that was there and what EthCC used to be 5 or 6 years ago versus, there was a Bloomberg article, I think, talking about how it's come a long way and really up-leveled the industry and the ecosystem. What did you see? What were your thoughts there?
Yeah, it was really funny on Twitter. Everyone was, over the past many, many months, hating on Cam. It's like goes against the EthCC ethos. I mean, we hosted a side event. It was very challenging. It is very expensive. And then now everyone is like so excited that it's going to be in Cannes for the next 5 years. And if they didn't come, they have so much FOMO. So I think ultimately the idea of Cannes is like so bougie. It's all about yachts. It's all about advertising and film. And it hasn't really been like viewed as a tech hub. But the execution is very small, incredibly walkable. You can go for a swim in the Mediterranean before your day gets started. Really fun to have networking meetings with your feet in the sand, drinking a glass of rosé, with the sun on your face, talking about how you're rebuilding the future of finance.
Do you think that the location changed the audience attendee? Do you think it was a little bit more of some of the institutional and more TradFi type players that were there and paying attention to things like what Centrifuge is doing?
In some ways, yes. In some ways, no. So a lot, like all of the major DeFi founders were still here. So Stani was here and Sergey was here and Paul was here and Guy was here, and like everyone that you see at all these major events, they were still here and they were doing events and they were speaking and going to events. Maybe you would argue those are the more institutional folks anyways, but from the world of RWA, all the people that we saw, that we, built communities and events around at previous ECCs, they were still here. The more like crypto OG degens, I saw a couple of funny tweets where a few folks were like, I didn't go to EthCC and I was hating on it, but I'm definitely going to go next year because I had so much FOMO. So maybe we saw a little bit of that this year, but I think next year, the people who didn't go this year will go next year. Another interesting backdrop was the Robinhood event. That was the day that the ECC started. So there was like a Seleni event, which was very institutional, very VC focused, and then the Robinhood event where they were really focused on tokenization. So from the RWA and tokenization perspective, this was like, there wasn't a better way to start off the week. And the energy was really high. The crowd was really excited. Everyone was focused on tokenization and stablecoins and RWAs, and the fact that, like you said, we're having our moment. We don't view it as a moment. We view it as an inflection. But the backdrop of Cannes as the way to really drive this forward seemed to fit pretty well.
And this had to have been the sixth or so, I might be totally off here. I'm assuming sixth or seventh RWA summit that you all have done, right?
Yeah.
That's pretty impressive. What were the any big Centrifuge announcements that came out of that?
Yes, we announced that we're partnering with S&P on a twofold product announcement. So we're working with the Dow Jones Indices team to build a proof of index product so that any asset manager can build an index fund tracked to S&P data. So really big announcement. We had the chief product officer from SAP join us on stage talking about how excited she is to rebuild the ETF industry on chain with Centrifuge. Alongside that, we announced the first fund we'll be doing with them, which is the S&P 500, if you've heard of it. We're doing that with Janice Henderson as the sub-investment manager, and then we're launching that on Base. So that was a really nice panel we had. Then we also had
you said you're launching that one on Base?
We are, yeah.
Nice. Great.
So then we had the Coinbase folks on the panel as well. So that got a lot of love, especially coming out of the buzz around bringing stocks on chain. So now a big part of the debate is it individual stocks or is it indices, or what's the path to bringing all these financial assets on chain? And then later in the day, we had Janice Henderson again with Grove. So they were talking about the tokenized JAAA. Grove was talking about the $1 billion investment. So that was a nice compliment to say, the fastest fund to $1 billion with Grove, and then this really new innovative product that we're building with S&P. So that was alongside a couple other announcements. I think Fostenar did something really interesting with Morpho and Steakhouse. So it was really cool to see the RWA Summit being used as this jumping off point to share some of these major announcements for real world assets.
That's awesome. Congrats on
And
all of that.
actually, I guess now that this podcast is going out in a week or two, we'll be announcing that Foster Wright, the ex-president of CoinDesk, he's taking over the RWA Summit and building it and growing it and scaling it and bringing it to the next level. So Centrifuge founded it in 2023. So proud of the work that we've done, the community that we've created. But at this point, with our team size, we recognize that we don't have enough time to focus on continuing to make it the best RWA event that there is. So really excited to pass that off to Foster and see how he continues to bring that to the next level.
That's awesome. That's great. So the RWA Summit will continue on. You mentioned the tokenization of stocks. What's your take on the digital asset treasuries over the past couple of months?
Yeah, our view is starting with indices, starting with funds. We view them as more of a collateral use case where they can more quickly be used across lending markets, borrowing, lending, collateral, like very interesting primitives on the utility side. I think ultimately every stock and everything at the base level will be tokenized, and then we see this future where we can work with folks like S&P to, disintermediate the asset management industry so that all these funds can be built and tracked against indices in an automated and fully autonomous way. So I think those two paths will go in parallel, where our focus has started on the fund management and the indices side. Folks like Kraken and Backed, and I guess Superstate is taking a slightly different approach with Opening Bell, but there's a lot of different ways that people are approaching the individual stock and equity level. And I think to me, it's just indicative of the fact that this is a really strong next asset class where there is a huge amount of pent up supply. And now we're also seeing that paired with demand. And then working with exchanges and working with really interesting distribution plays are where we'll start to see a lot of growth and engagement for those assets.
Great.
Yeah. The Robinhood and OpenAI feud definitely got a lot of mind share over the last week. But from our, the marketers and us, all PR is good PR, right? So I think OpenAI,
it's not necessarily a bad thing. It just brings the conversation front of mind. I think we all get stuck in these bubbles that we're in crypto, and then you show up to a family weekend or a holiday and people are still like, what, you're still doing that? Like, hold on. Right. All right. So just as we round off here, first of all, congrats on a very productive couple of weeks, lots of announcements, lots of great news from the Centrifuge team, amazing leadership that you've got going on there. Can you tell us a little bit about the CFG, the Centrifuge token, and sort of the DAO and the utility there, and what's next on that front?
Yes. So CFG is going through a renaissance. As part of our migration from Polkadot, we also migrated the token. So we previously had Polkadot token, and then we had a wrapped CFG. Now we just have one CFG, which is EVM. So that was a critical building block to deepen liquidity, to focus everything into one token.
Was that a tough transition, moving from one chain on to EVM like that? How much work is that technically behind, and then sort of cutting everyone and moving everything over?
Yeah, so on the technical side, we rebuilt the protocol. We're launching in a couple days. And we were able to really just focus on building it right from day one. On the CFG migration side, the technical conversations and work was very easy. The challenge where we did have was more on the exchange side. So having conversations with Coinbase, with Kraken, with all these major exchanges that supported the old CFG, and talking to them about the future, what our plan is, what our strategy is, how we're building utility. So kind of reframing how they think about prioritization of all these different listings, because they're looking at pre-TGE projects that haven't launched yet, or they're looking at Fartcoin, which has insane volumes, and we don't really fit into a simple category for them, having been around for so long. So it's something we're still navigating. We're listed on KuCoin and Gate and I think 10 exchanges now, and we're still having conversations with the majors. So that was the most challenging part of it. So if you or any of your listeners know anyone at Coinbase, go tell them how much you love CFG.
It's hard. It's a lot of work. I can only imagine.
It's a lot of work. Yeah, but what we're doing is that we're just taking it upon ourselves to ensure that we can more effectively communicate and excite our community. So the team has been very focused on bringing in all of these institutional partners, creating all of these DeFi integrations, growing TVL, putting these pieces in place. With JAAA, we have turned on the fee switch. So we're starting to generate revenue to the protocol. So what we're focused on is how can we translate all of this work that we're doing and make it resonate with the broader community that wants to participate in governance and in the Centrifuge ecosystem and help shape the future of the protocol. So over the next couple weeks, we are announcing a couple utility strategies that we have in place. So now that we have a path to generating more significant revenue, now that we have this strong growth trajectory and pipeline, what we've spent a lot of time on the leadership side talking about over the last couple months is how do we accrue value back to the community and the CFG, and how do we really orient the wider ecosystem around helping to support Centrifuge and our growth and the work that we're doing. So right now it's governance token. There's a couple utility initiatives that we'll be rolling out over the next couple months. And our focus really is just how we can get everyone educated, aligned, and helping to contribute to the work that Centrifuge is doing.
Fantastic. Bhaji, thank you so much. This was a really great overview of Centrifuge, a really great update. I appreciate you joining us today.
Thank you, Kelly. It was great to be here.